The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 22nd, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, change your mind and change your life. It really is as simple as that. You and we've really got no idea of that giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master, well, it's trading. It's really what this show is all about, trading, investing. Another area, of course, is time. You see, once we master time, and here's what we understand, and you know this to be true, we typically overestimate what we can accomplish in a year. However, the other side is true as well. We underestimate what we can really achieve in a decade out there. Make sure you're always aware of your time frames that you're trading on, as well as how about just simply life's goals and accomplishments out there. Now, some folks don't achieve what they truly want. I know that doesn't hold true to you, but the main cause is because they never direct their focus. They never concentrate their power, as if they were dabblers in life. You know, you don't want to dabble your way through life, never really deciding to master anything in particular. And the reason is because success comes from taking initiative. It comes from being persistent. It comes from making sure that we express the depth of our conviction for every action that we take for those things that we want in our life. And the question is always, what simple action could you take today, this very moment, to produce a new momentum toward some level of success in your life? It's one step at a time. Maybe it's a baby step, but soon those baby steps, they turn into jogging. And then from jogging, it's a sprint. Folks, this much I know to be true. The path to success, it really is to take massive, determined action. Because there's no abiding success without commitment. If you want to be successful, the formula is pretty simple. Find someone who's achieved the results you want, and then copy what they do. Guess what? You'll achieve the same results out there. Quite frankly, if you really decide to master it, you'll achieve results better than what they achieved out there. The time is now to master anything that you want in life. Mastery, it is a beautiful thing. Lastly, let me leave you with this. You know, life is a mirror, and life will reflect back to us what it is that we think. My favorite expression, you know it, about mirrors is this: turn your mirrors into windows. It means look in the mirror, see the person you want to become. I say become because we are always improving, and then take massive action and jump through that mirror. Turn that mirror, folks, into a window. Let's go check out the mirrors of the markets, because we've got the mirrors, and it looks like you got the bears in the mirrors, and the bulls are trying to jump right through it. The Dow is off 21 points right now. It's trading out at 16,392. S&P is up 94 cents, so a flat market. It's trading at 1844. NASDAQ Composite up 5 points. It's trading at 4231. Russell 2000 up 1.5 points, trading at 1177. We've got Intercept Pharmaceuticals leading the charge, the upside up $9 and change. You've got Vision China Medical up 26%. Priceline is up 0.5%, up $5. North Valley Bank up 6.5%, up $5.73. Norfolk Southern up 5.70 as well. That's up 6%. Actually, North Valley Bank is up 30%. I misread that. New Skin Enterprises, don't touch that. That's up 7% out there. That thing has gotten hammered to the downside. Leading the market to the downside, you've got Barrett Business Services. It's off 9%, off $9. Last trade fired off at 91.90. BBSI is the ticker symbol out here. Let's see if they reported numbers. They must have reported numbers. but those numbers are not really punching up on my screen here. So on to the next one. You got IBM. That's off $6, so it's off of its session lows. It's trading out the 182 level. That's important because on the daily chart, the 181 level is the bottom of a consolidation area. Parker Hannafin is down $3.80. Wynn Resorts off $4.60. Coach out with number COH, the ticker symbol. They're down 6% this morning. Our call number 877 927-6648. If you give us a call, be happy to take a look at your stock chart. Let's start off by taking a look at the Russell 2000. Russell 2000 is a quasi-leader. You got the fight between the composite and the Russell 2000, the upside, only both up a little over 0.1%. Well, that's part of the story. If we take a look at yesterday's action inside the Russell, making a new high on its way to 1184.01. 1184.01 forms a 1.618 butterfly. I suspect that it's going to hit that area tomorrow. So you're trading at $11.77 right now. That says another $7 out there. Doesn't mean it can't go higher. Doesn't mean it's going to hit that level. It's just the next pattern that is out here, and that would form a 3 drive to a top pattern. It would be a symmetrical 3 drive to a top pattern. If we take, I believe it is. Let's go take a look at that and make sure. Let's make sure Stevie's telling you the truth out here. Your first drive really was your second drive. This is the third. This is the second 3 drive pattern, but the first drive we would use for this pattern that took place November 29th. The second drive right out here. That's the high. That's that little shooting star candle. On December 26th, getting above that was very bullish out there. That is a total of 18 trading sessions. 18 trading sessions usually makes a cycle highs to cycle lows. If you are a cycle person with regard to trading styles out there, you'll be familiar with that 18-ish day trading cycle. That says January 23rd. That would mean tomorrow would be when that high ought to come in. Does it mean that that stops right there? No, it just means that that's the pattern right now that is underway inside of the Russell 2000. Russell 2000 typically completes its patterns earlier than the market out here, but if we go take a look at the market and we take a look at the NDX 100, we're going to see the NDX 100's got a similar pattern out here. And I already had the, looks like that is on about a 15-day cycle out here, and that 15-day cycle says that tomorrow the NDX 100 ought to be completing a 3 drive to a top pattern right around the 3650-ish level. Right now you're trading at 3619, just kind of a sideways day out here. So the NDX 100, the Russell 2000, really signaling to us that it wants higher price, and those are the areas where I suspect that they will head to. Could go higher, but that's just really the first level. That's the next level that we are taking a look at. If we take a look at the S&P 500, here comes the stretch out here. The S&P 500 to form a similar pattern. This one I don't know. I'm not necessarily buying into it, but it's doable. That would require a move up to about the 1870 level. That would be about a 30-point move from here, and I'm just not seeing it. And so what does that actually mean? It means that, maybe the consolidation of the December 31st is all we're going to really see inside of the S&P 500 out here. This one is a little bit more difficult. This one doesn't have that expanding pattern like we see inside the NDX 100 as well as the Russell. At least it does not at the moment, and certainly it doesn't here today, just trading flat, down 62 cents out there. If we take a look at the Dow, well, the Dow does not have that pattern in play at all, and I don't expect that that's what we will see. The Dow here, the best that we can squeeze out of the Dow, at least at the moment, would be a test of the December 31st high, and that is out at 16,588.25 out here. Otherwise, the Dow is just really traveling in a sideways consolidation range. Of course, last time that it was in a sideways consolidation range, it was a doozy, because that doozy basically was from April in 2013, May of 2013, and did not break out of that consolidation. Really, the true break came on December the 12th out here, 2013. It broke through, it came back, tested it as it should have, and it tested it, and it was off to the races December the 12th from that point forward, and it completed its consolidation move. The Dow here, just to give you an idea, the Dow's completed a number of different patterns. So on the daily chart, it completed that 1,000-point consolidation. On the monthly chart, the Dow has completed its consolidated moves out here. Let me find that for you. We can show you that on the screen here. And here is the Dow. So the Dow been traveling in a 15-point sideways consolidation. It was a 4,550-point consolidation, the top of which was the 2,000 highs. It broke outside of that consolidation, did it with some conviction, did it on October of 2006, and price came back down into that consolidation, got back inside there, went down and tested the bottom, just like, we took a look at during the first show. We took a look at an intraday chart, a 30-minute chart out here. As I mentioned during that segment, the beauty about taking a look at those intraday charts, they work the same way on longer-term time frames. Well, it doesn't get too much longer and too much larger of a time frame than this because this is a monthly pattern out here. Now what we can see is that 4,550-point move that was actually completed last month in December out here. Now, consolidation moves are equal to or greater than the consolidation level. And what we've seen here is a slight move above that. That does not mean that because it's completed it, that it can't move higher. It just means that right now that consolidation has completed inside of the Dow. You have not seen a reversal candle, and until you see a reversal candle, I mean a reversal candle, a true, one of the 4 or 5 that act as reversal candles out here, the Dow is going to power higher. It's like it's equal to or higher than the actual consolidation pattern that it broke out of. And if we take it, there's no divergence. There is no price relative strength divergence in the market. That is what has marked all of the other significant highs. You go back to 1929, before the crash took place out there, folks, this pattern was present. This pattern is present at every single major market turn inside of the marketplace. That's the cool thing about it, is that this pattern is present. Will this time be different? I have no idea. I just know that this pattern isn't present right now. And that pattern was present inside the S&P 500 on a monthly basis. If we take a look at the S&P 500, it has not completed its consolidation move out here. So the S&P 500, this wants to move up to that 2350 level. You're at 1842 right now. So the S&P 500 can certainly take along the Dow to much higher prices out here. If we take a look at the S&P 500, I said, I can't identify a similar pattern to the Russell 2000 and the NDX on a daily chart. But hey, if you take a look at this monthly chart, tell me what's bearish about this monthly chart. Exactly. Absolutely nothing is bearish about this monthly chart. There's also no price relative strength divergence out here. So any kind of pullback really becomes a buying opportunity inside of the marketplace. Of course, we have not seen that pullback take place as of yet. If we take a look at the Russell 2000, just as an idea, the Russell 2000 showing big strength out there on the daily charts, showing big strength out here on the monthly chart. It wants to eventually move up to 1350. That doesn't mean it does it overnight. Right now it's traveling out at 1175. At the 12-ish type area is its next primary trading range boundary line out here. But its longer-term target is in the 1350-ish range out here. And as you take a look at this monthly chart, there's not a darn bearish element about this whatsoever. None. Doesn't exist, not as we speak, and it is January 22nd. So how many more trading days do we have left in this cycle out here? I don't even know, but 5, 6, something like that. 877-927-6648. It's the Dow that is the laggard. Nothing new there. It's off 49 points. We'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is off 46 points. S&P really flat out here, off 63 cents. Composite is up 5 points. Let me take a quick peek here at the New York Stock Exchange. Let me see what that is doing. It's off $6 right now, but we got net advancing issues. Talk about some nice market breadth out here. You've got 1,600 advancing, 1,100 declining issues out here. Some nice strong market breadth out here. Let's go to Chris in Neshorta, Wisconsin. Chris, thanks for calling. Thanks for holding. How are you this morning?
Morning, Steve. Nice to talk to you again.
Thank you. Yes, you wanted to take a look at natural gas. Tell me what you're doing and how I can assist you.
Well,
I think, as I recall, you were looking for a potential short. Is that right?
Yeah, I'm still waiting on it, but it's getting closer. I'm looking at the price range found of the nat gas futures on a weekly, which tops out at around $4.80, and with a low range of $3.30. And we're starting to move strongly here today in that direction. And I just want to get your feel for that. You think it's going to continue to hit that and perhaps even break through with the kind of winter that we've had?
It sure seems like that. It has been strong. And when I mean by that, I mean when I take a look at, just as an example here, and if we take a look at the current contract out here, it formed an A to B equals CD down. It was a 1 to 1.272, and it hit that really right on the spot. Now, the reason why I say it's really strong is because during that pattern here, and 1 to 1 A to B equals CD patterns, they complete about 60% of the time. The other 40% is going to complete something different. On the move down here, it was traveling along what I call the inside, the left side of that C to D leg. And when it does that, when it's strong like that, it actually says it should do an even larger move, and it didn't do that. It didn't do that, whether it was inventory draws, whatever really the reason is. Chris, I'm really just looking at the technical aspect of this. And the mere fact that it, even gapped up the next day, now it's taking out the swing point here from December 23rd. It's doing that with volume here this morning. The question is this forming an A to B equals CD up? And if the answer to that is yes, that's a huge A to B equals CD up leg. Because really, in one sense of the word here, Chris, is that what this formed on the way down was it formed a Gartley buy pattern. Because a Gartley buy pattern doesn't require that you make a retracement to a Fibonacci number. It only requires that, in fact, what you do is you make a retracement, an A to B equals CD pattern. That's it. And the A to B equals CD pattern, the intention there on the way down, what Gartley wrote about, was the idea that you want to be able to find the best entry price into a strong trend. In this case here, the strong trend was coming off of the lows on November the 4th out here. So it came off of those lows, B line, straight line up, and then it made that A to B equals CD down. So that, in essence, has formed a Gartley buy pattern. That truly has worked. Now, Chris, there are 4 outcomes of a Gartley buy pattern. This has surpassed, there are 5 outcomes that you typically like to see. This has already surpassed those 4. So let me put up let me do this here. Let me put up the Gartley buy pattern, and I'll show you what those outcomes are. So I will tell you that from a Gartley perspective is what we're going to make our decision on. And those 4 or 5 patterns, actually, the first one is that in any kind of Gartley pattern, buy or sell, in this case here it's a Gartley buy, you're going to see a 0.382 retracement. Well, that would have taken it about $4.20. Heck, it almost gapped up to that level and came through with a wide-ranging bar, got right up to the 0.618 area. That told you it was going to move to 0.786. Well, by the time that it actually did that, it was doing it with a wide-ranging bar. It sold off on January 16th, but only took 2 days to recharge its battery, coming into that area with a wide-ranging bar. And this morning, it's got another wide-ranging bar. So your first outcome is a 0.382. Your second is a 0.618 retracement of that pattern. The third is the 0.786. And the fourth is a 100% move of a move. It's done that. The ultimate outcome is that what happens is that this turns into an A to B equals CD on the way up. Well, in essence, that's what we really have here this morning based on this current contract, because it's taking out a swing point with volume. 82,000 contracts December 23rd. Today so far, 85,000 contracts. So it's taking it out with volume, and if it can close above 457, 4.578 out here, what this says, Chris, is it wants $5.05 at a minimum. At a minimum. And in this case here, it's strong off of this C point. So until you see a reversal candle, and if you can hold on through this break here, if you want to take that short trade, just wait until you at least get a reversal candle. But if you want to hold on through the break, we can come back and we can take a look at it, and you can share with me some other things that you're looking at as well.
Thank you.
Alrighty, we'll be back with Chris from the shore to Wisconsin. We're going to take a look at natural gas. In fact, we'll put it up on a weekly chart. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is trading off 30 points. S&P is flat. NASDAQ is up 8 points. We're going back out to Neshorta, Wisconsin with Chris. We're taking a look at natural gas. Right now it's trading up about nearly 4%, up 16 pennies. And, Chris, so you're taking a look at the weekly chart out there. And I gave you the setup on the current contract here on the daily. So tell me what else it is that, does that help you at all in your trade, or at least some of the thinking behind it?
Well, I see on the weekly that looks like that would be the December 2nd, week of December 2nd. That's at 5:05, lines up with a little pause there on that candle. And I see that looks real good on the daily also on that December 9th, 2011. You think it has enough strength that it could potentially get to that before it turns? Which
well, what what I know is the ultimate outcome. If I were going to teach you how to trade a Gartley, let's say that you want to do, become a master of trading the Gartley patterns. What I would absolutely tell you is there's 5 outcomes when you're taking that trade, and you're using that for exit strategies, both the stop as well as your exit points. And part of that is certainly taking a look at the candles. And the natural gas contract at the present time, has certainly displayed that it's achieved 4 of those results. The 5th of those results, I can't guarantee that it makes its way up there, but the 5th of those results does get you to the 505-ish type area. Now, it's going to need to do that. Without getting a reversal candle before that occurs, because if it does, it could get into one of my favorite reversal patterns, which is a price relative strength divergence pattern, because it's making this move so far on less relative strength. But that's not a big deal until a reversal candle shows up. I can tell you that in the weekly chart out here, as I put a weekly chart on my screen, maybe you have these same lines drawn in here. It's traveling in a very nice rising price channel, and that rising price channel coming off of the lows back in April of 2012 out there. And so it's traveling towards the top of that rising price channel, which is really using the open of the session from November 30th, 2012. Looks like that open. Now I'm looking at a continuous contract here. So it looks like the open there is about $2.81, and then the next area, the next touch point that I'm using is the close of the body from the week of October 29th. Looks like that's around 381, and that sets up a nice area of potential resistance up there. And it's traveling into that area as we speak right now. It hasn't hit it, but that's where there could be some resistance. Let's face it, that resistance line is held on several occasions. It's been tested 1, 2, 3, 4. This would be about the 5th time up in that level. So. Now, you're really referencing a weekly chart. Is it because you're looking at the weekly chart for resistance, or you're looking at it as a long-term trade?
I'm looking at it as a long-term trade.
Okay. I would then the weekly is the one that you want to use, but you're using the weekly chart as long-term trade, but you're going to enter based on a daily signal?
That's correct.
I mean, that's good. I just want to make sure I hear what you're saying.
But I might have to rethink my long-term position, because I was looking at that weekly with that range that has been trading in. Now, what we're seeing happening now with this Gartley to complete itself, that would trade it outside of that range that kind of got set up as of beginning of 2012 to present.
Yeah,
so,
there's another thing that you probably should take a look at. I don't trade natural gas enough to know, but what I would say, there is the seasonal cycle out there. There's seasonalcharts.com or something like that, Chris. You might even be more familiar with it than I am. But if not, try to do some type of Google search on that and see what kind of seasonal patterns it also is that we're looking at inside natural gas. And take a look at that too, just to maybe put that assessment, as part of your trading pattern out there. But wait for a reversal signal. I mean, at a minimum, you need to wait for a reversal signal, and that we don't have as we speak right now.
And can you list those reversals? It would be an island reversal. Would it also be a hammer candle?
At the top here, you're looking. The island reversal isn't too likely. So and at the top you're looking more for a shooting star. It's the opposite of the hammer candle, where you have a long wick at the top and a small body. Bearish engulfing candle would be the next. That's where the body of one candle wraps around the previous candle. Now, in this case here, it would have to be a red body that wraps around a green candle because of the move down. And then what you're doing is you're setting up your resistance, or your stop is just above the top of that resistance level out there. So those would be 2 candles. You've got 3 candle formations, such as an evening star pattern out there. So there are just some reversal candles that you should pay attention to, and some that you just simply should ignore altogether, because many of them aren't reversals. So that's how I would be trading it. And because you're using, so I'd be paying attention to this weekly chart that we're looking at, and then I would go ahead and look at that daily chart and watch to see how these patterns here confirm. The trend is strong enough that if you do get a reversal candle, hold off for one additional session. out there because you're looking at a longer-term trade, and make sure that on that second session that it does trade in the direction that you're looking at. So it's kind of like going out and going to a doctor and getting a second opinion is what I like to refer to it as. Alrighty?
And if that second opinion concurs, then you're likely to have the right move.
Yeah, I found that when that second opinion occurs, then you've got, and especially because you're looking at a longer trade and using a shorter term trade time frame to enter, it just puts it doesn't guarantee the trade's going to work out. When the second opinion fails, it guarantees you pretty much that it's not going to work out. So at least this way, you've got the odds going in your favor.
Great. Well, thank you, Steve.
All righty. Hey, you bet. Thanks so much for calling. Folks, we had a caller during the last hour that I didn't get a chance to get to, and he wanted to take a look at the utilities sector out here. I recall during in between shows, I went ahead and I utilized the Rhodes market scanner. I'm going to go ahead and put that up on the screen here. Now, this is a market scanner. It's part of the tools that I use. Now, the time frames here that I'm taking a look at, because this individual, as I recall, is not, I don't recall if he's looking for a long-term trade or not. I've got the shorter term. Well, I'll call it the quasi-shorter-term trade. This actually is a good time frame to look at if you're watching us on Tiger TV. Now, what I've put in here is I've put in the entire sector for the S&P 500. So I put in the entire group of stocks that makes up the XLU, the utility sector. Now, they're not listed here in a weighted order, but this is each of the stocks that are inside here. We're looking at the time frames of the weekly. That's on the left-hand side. We're taking a look at the daily. That's in the center. And we're taking a look at a 120-minute chart here. That's on the right-hand side. If we start over on the right-hand side, if you take a look at the 120-minute chart, what you're going to see, the blue areas, you can see, maybe you can read it. If you can't read it, I'll tell you what the blue areas indicate. They say strong uptrend. So there's only two stocks here. There's three stocks that are on a short term in the 120-minute chart that are on a little bit of a bearish outlook. And I do mean bearish because really, if we take a look at the first one that shows up on the 120 minutes, it's Entergy Corp. ETR is a ticker symbol, and it's just retracing actually. So it's not really bearish. You expect markets to retrace, and this one here is actually retracing. The one single stock inside of the utility sector right now on the 120-minute chart that is in a bearish mode is First Energy Corp. Otherwise, all of the stocks on the 120-minute chart are in a nice, strong uptrend. Now, if we take a look at the daily chart, on the daily chart, there's really only 5 equities, truly, that are in a bearish outtrend. Now, as far as the number of equities that are inside here, let me count them. 1, 2, 3, 4, 15, 16, 17, 18, 19, 20. So there's 31. I believe there's 31 if I did my counting correctly, and I don't know that I did, but I believe there's 31 equities that make up, I could go to a quick spreadsheet, but 31 equities that make up the entire utility sector. Of those 31 equities, now they're weighted, and so I don't have the weighting. The one thing I haven't figured out yet how to do is to list these in a weighted order. I'll figure that out. I just haven't done it yet. I haven't spent the time. Anything is doable with computers. That's the beauty out here. But what you can see is, so you've got Duke Energy on a daily. That's in a little bit of a bearish mode. A Consolidated Edison ED. That's in a little bit of a bearish mode out here. It's really those two stocks right now are really, you've got a battle going on between the bulls and the bears out here. So the trend still says bullish, but the bears are really trying to push down. They're the ones that actually have a little bit control of the price right now. But you can see here, if we take a look at the daily trend, for the most part, with the exception of really one equity out here, First Energy Corp, you can see that this is in a nice bullish mode out here. So that's on the weekly. So you're seeing the utility sector certainly turn up here. Even on the weekly charts out here, more than 50% of the equities are in a new uptrend, a new bullish uptrend, a strong uptrend out here. So, the 120-minute chart is going to turn before the daily is going to turn before the weekly chart out there. So I hope that helps the individual that was calling about the utility sector. Again, I don't know what the time frame is that is out here, but this certainly at this stage has made a turn to the bullish side out there, and that is in using the market scanner that I have that helps to identify the trends out there. If I were to put up this same chart, I'm not going to do that here right now during the show, and we went ahead and we scanned this for every sector within inside of the S&P 500, both bullish and bearish out there, it would surprise the heck out of you. I actually do this scan here for my clients, as well as I take a look at just the top weighted top 10 equities within inside each of the ETFs inside each of the sectors, I should say, that make up more than 50% of the weighting structure inside those. So if you trade something like the Doug or the Dig, you need access to this. If you trade the financials, the XLF, and you trade them using the 300% or the 200% or just the single, then you need access to this type of information, because it'll keep you on the right side of the trade or get you out when you are on the wrong side of the trade, because you do not want to fight the trend. And what I can also tell you and report on is that inside the GDX, they are all bullish. Now, I don't have access. There's about 7, 8, 9, I believe, equities that I'm not getting the data feed on. I'm not paying for a data feed from Canada. I'm not paying for a data feed. There's an Egyptian stock that shows up with inside the GDX. I'm not paying for that data feed. There's a couple of others that come in that are with inside the GDX, but all the ones that trade on the U.S. exchanges out there, they are in a super bullish mode. I mean, the trend has absolutely changed, and we're taking a look at the 120-minute. We're taking a look at the daily trends out there, and I think a majority of the weekly trends too, although you can't quote me on the weekly because I don't recall off of the top of my head. But in any event, right now you do have, speaking of gold, you've got gold is trading off $2. Silver is flat out here. Let's go take a look at the commodities, and I want to go back and take a look at the Shanghai for you. I mentioned that if it was during one of the shows. If we take a look at gold, here's a weekly chart on gold. You expect gold to run into a bit of resistance, overhead resistance. Why? Because it's really trying to break a descending price channel. So this is a biggie out here. This is the descending price channel taking you back into October of 2012. And on the daily chart, gold and silver, they clearly were breaking trends, and they were hitting the screens around the world. So it seems like everybody's being a little bit nimble here, trying not to tip their hand. But, of course, the momentum indicator system, the Rhodes momentum indicator system, you can't hide from it. You just take a look at the different time frames, which could be 30 minutes, 60 minutes, 120. And I take a look at all of those so that you can start to see the trends changing there. And so inside of the mining equities are behaving way better than the actual metal is itself, but really the metal's behaving fine. It's doing what it's supposed to be doing, and it was supposed to find resistance up at this descending price channel. So also from an intermediate term standpoint, because this is a weekly chart that we're looking at, and we're speaking with Chris in the shore of Wisconsin about natural gas, and he was taking a look at a weekly time frame to make more of an intermediate trade. So you may not be invested in any mining equities or metals themselves because they just continue to get trashed out here. Really all you want to do is pay attention to the charts, because it's not going to lie to you. Somebody on the air, who knows what kind of work they've actually done. Who knows what kind of thinking they're doing? Who knows if they swim with the pack or whether they're the leader of the pack? Well, you want to be the leader of the pack, and that means just pay attention to the different signals that are out there. One of those signals can certainly be rising and declining price channels, and from an intermediate term basis, gold has not broken that price channel. It has on a daily chart because it's just looking at some different trend identifiers out there. But on the weekly chart, as soon as gold does break above this area, it ought to get the attention. Now, if it can do it and it can maintain it. I talked to Chris about having a second opinion. That means it can't just break it on one week and then fail on the next week out there. It means it wants to, if it stays outside that rising price channel, that will send a pretty significant message to at least technical traders around the world out here. If we take a look at silver, we took a look at the sideways consolidation pattern that it is trading inside of. It's been doing this now really for quite some time, really since about the middle of November. So we're now 2 months into the sideways consolidation. Whichever way silver breaks, it's about a $2.30 move out there. Bottom of the consolidation is right around the $19.26 level. If silver does pull back there and holds, that would be a time to take a look at adding a silver position. If you take a look at light sweet crude here right now, light sweet crude is making its move up to the 0.618 retracement, which is $97.12 out there. So that's its next move. It's trading right now at $96.35. A quick check on the 30-year Treasury before we go off to the break here. A little doji candle yesterday, a little bit of resting. I see the leaves are not falling off the trees. That means we haven't seen a lower move here inside of the 30-year. It may want to make a move all the way up to 132.32. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The fight goes on between the Bulls and the Bears. Right now, you've got the Dow is off 62 points. S&P is down 2. NASDAQ Composite is up 3 points. Russell 2000 is flat. It's off 11 cents out here. So let's try to make sense of this market out here. A lot of the focus, obviously, on the top line guy out there, the Dow, 62, down $62. But really, in my opinion, that's really not the place to be concentrating on. That is the weak link out here. There's no question about it, and plenty to be learned from a weak link. But I would really be paying attention. Well, I am paying attention. I'm not asking you to do anything that I'm not going to do out here. And I'd really be paying attention to the strong hands out here. Now, during this hour, we've taken a look at the Qs, or the NDX 100. We've taken a look at the IWM, or the Russell 2000. Really both in the same out here. And we took a look at those 3 drive to a top patterns that they look like want to complete. Those take us up into higher price. Say on a time basis, they complete tomorrow. So at the sometime tomorrow out there is when those patterns would complete. Now, because they achieve those price objectives, that's not really a meaning that you would go ahead and you would then short it out there. As a 3 drive to a top pattern or bottom pattern or any pattern needs to be confirmed with a reversal signal out there. But that's what's set up right now. What we also have is we've got inside the futures markets, we've got several consolidating patterns. So I would be saying you'd want to see these patterns here fail. If you see these patterns fail, then when the strong hands give way, okay. But at this stage here, if you take a look at the NASDAQ futures, far from failing. In fact, right now, all that we see taking place inside the NQ is price just maybe coming back and testing the top of a consolidation that it's trying to break out of, a 30-point consolidation that it is trying to break out of. Look, even if the NQ gets a little bit of weakness here during the next hour or so, it's got to break 35.79.50 in order to really then decide to break to the downside, in order to lead to the downside out here. So at this stage, right now, the NASDAQ, I would be paying attention to that. And the areas to be watching, 35.79 is one area. Of course, the top of the consolidation pattern where it's trading into right now, I'd say is about the 36.02-ish, 36.10. Yeah, 36.10 level. Right now you're trading at 36.12.25. So that's one area that I would be paying attention to. Inside of the ES Mini, it also has its own consolidation pattern. It's a 14-point consolidation, and it's got to break itself down below the 1829-ish level, close below that, before you start to see a failure here. Otherwise, what we're seeing is just a choppy market. And choppy markets are very difficult to make money in until you identify the consolidating patterns out there. And that's what we want to be doing, because I don't know what 2014 has in store for us, but to the extent that it starts off with a choppy sideways trading market, which is what we've got now, because we've been trading sideways here really since the January, this is the intraday chart. We can go back a little bit further and see that we've been trading sideways for a while with that consolidation. Until we see a break one way or the other, the only real trades from the long side index or the short side are to be able to play the consolidating patterns out here. Once it breaks, then the trend can resume, whichever it is, to the upside or to the downside. I suspect right now that what it really wants to do over the longer haul here is break to the upside. We just haven't seen that just yet. We want to pay attention to the New York Stock Exchange. It's doing pretty well here today, even though a little bit of pressure, but we still have net advancing issues, 232. I think it needs around 1,608 or 1,700 or something along those, and net declining issues in order for the bears to take hold there. And, of course, we want to always be paying attention to our Euro-Japanese yen. It's trying to break a descending price channel. Has not done so yet, but if it does, that'll be our signal that the market is ready to try to break topside. So, folks, stay tuned. Our man Basil Chapman is up next. After Basil, we got Larry Pesavento, Daryl Martin, David White. It is Wonderful Wednesday. That means you got the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you bright and early tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.